Welcome. My name's Jim Wade, and I'm a tax attorney here in Maine. And in this episode, we're going to be talking about how to respond to a CP2000 notice. In my prior video, I talked about what a CP2000 notice is. So if you're not sure, please go watch that. In this one, we're really going to talk about what do you do once you get that notice. I can't go into all detail about everything you need to know, but what I'm hoping is to give you some good general pointers about what to do and what not to do so that if you decide you want to handle it yourself, you'll be armed with enough information to hopefully succeed and get your case taken care of in a way that it goes in your favor. Please keep in mind, CP2000 notices, they're sort of a general form that do a lot of things. So they may have differences between them, but I hope you'll take away at least the gist of what I'm saying, and that will help you get through it. If you do need help either understanding or resolving a CP2000 notice, you can always call our office, and my information will be at the end of this presentation. All right, let's get started. So first thing, when you get a CP2000 notice, the first thing you're going to notice is in the upper right corner a big number that the IRS is proposing you pay. It can be frightening. That is a proposal. It is not the tax you are going to have to pay or with interest and penalties. What it is this is sort of like the opening salvo by the IRS, because the CP2000 notice is based on information reported to the IRS. And it doesn't always take into account things like expenses that you may have incurred in a business, basis if it's a sale of stock. What did you pay for it? The IRS will often get information as to what it was sold for, but not what you bought it for, and so on and so forth. Or you may be a source of income to you, but isn't taxable under the Internal Revenue Code. So anyways, this stuff there in the upper right is sort of the beginning position of the IRS. Those first two pages are going to explain to you what you can do. How to respond. If you agree, what do you do? If you disagree, what do you do? But what's most important is page 3, because that's generally where the detail of the IRS adjustment starts. The first top section is usually 3 columns showing what was on your return, what is the IRS proposing your return should look like, and what's the net effect of that change. I call that gobbledygook. That's the wonderful technical term. I think for most people, if you're looking at it, it's not going to make a lot of sense to you, and it may even confuse you. But do not worry. While this next section is not oftentimes greatly described by the IRS in enough detail to give you a good idea where to go, it gives you enough information where you should be able to figure out what is the IRS looking at. So what you'll see in this second section is a sort of table listing of the sources of income that the IRS is saying was either omitted on the return, or maybe there were some errors with that information on your return. And you'll see oftentimes in the far left will be the name, of the source of income. So if you work for Acme Corp, it'll say Acme Corp, have some information as to their address. Sometimes if we're dealing with a bank account, stocks, things along those lines, you may have the name of the custodian who's holding it or the bank, and there'll be some account information to help you identify it. Then the next columns will show like, hey, what was the nature of the income and what was the amount. From that, you should be able to get an idea as to what is the IRS proposing the change for. More often than not, what I see is this is either like a missed W-2 or sales of stocks, bonds, things like that, where they weren't on the return, or maybe you've got retirement plan distributions. Maybe there was a rollover that just you didn't report it because you thought rollover is not taxable, but the way it worked is it was taken out of one company, and then you took the money out of one retirement account, went over and deposited in the new retirement account. So now you've got a 1099 showing the distribution, but not the rollover. So those are oftentimes what you find. So My suggestion is go to the return that you filed, or if you have got an accountant, talk to your accountant and have them look at that to see, hey, was this information reported and the IRS just missed it? The way the IRS matching works, it's all done by computer. They have sort of a place that they're looking at on the return for the information. You might have, in fact, put it somewhere else. So first thing is make sure that, in fact, there is a problem. Then, if it is omitted, all right, is it taxable? Is it a mistake? Hey, maybe you got two W-2s from the same company and you reported one because that's what you earned. But there are times where you'll get duplicates of forms. And so the IRS is looking for the amount doubled up. So then you go, okay, we need to get this fixed. From there, the final pages are response form. Anytime you respond to the IRS, make sure you've given them a copy of that. And there's a place for you to fill in the information so that when you attach it to the form, it'll let the IRS know what you intend to do, whether you intend to agree, disagree, etc. Finally, make sure you keep a clean copy. I have people who will write all over it, and when you or they'll take pages out and there'll be pages missing. I always say if you can, keep the original somewhere safe. If you're going to use the original as sort of like a place to write things, fine, but make a copy of it so that if you have to come to someone like me, or if you've got to deal with it like on appeal or at tax court, and we'll talk about that in a moment, you'll have a clean copy so that the IRS or whoever's looking at your case can see what happened. Second, respond. The worst thing you can do is do nothing. Don't be an ostrich. When you do respond to the IRS, make sure you attach a copy of that response form filled out. Then you want to do a detailed cover letter. And you don't have to write the great American novel, but at least have enough information to say to the IRS, if we disagree, you want to go point by point. For example, going back to the doubled up W-2, let's say Acme Corp, dear IRS, I got your CP2000 notice. Here's my response. We disagree with the assessment based on the following reasons. One, Acme W-2 was, a duplicate of a W-2 that I received. I did not earn that amount of money. I only earned what was on the original, not the duplicate. Here, you can see my copies of my wage statements showing what I earned for the year. Or you can get something from your employer, whatever, a letter from your employer. Oh, hey, to attach to this cover letter to say, oh, employee so-so came to us with this notice. We realized we gave them two W-2s. We're going to get that fixed. That's how you respond, point by point. Hey, you said that I had, sale of these stocks. List what the stocks are. You didn't report the basis. Here's what I paid for it. And then you'd provide proof of what you paid. I don't want to beat that one to death, but you get the sense of attach a response form, have a cover letter explaining where your disagreements are point by point, and let them know what you're providing to respond to it. Finally, on that point, when you do provide this to the IRS, whether it be by phone, you call on the phone, you fax them something, you mail them something, get confirmation. If you're mailing it, have tracking or certified mail. If you're faxing it, make sure you keep a fax confirmation page. And finally, if you're talking to them on the phone, get the agent's ID number and date of call. They're required to give you their ID number. Make sure you get it. I recommend keeping a log of whatever you do for these CP2000 notices so that if ever becomes a disagreement as to what you did, you can say, look, on this date I did X, on that day I did Y, here's a copy of that certified mail return receipt that I sent them, or a fax confirmation page, whatever. Keep a log. Just make sure you're dotting your I's and crossing your T's. I don't know how many times someone will tell me that they've sent something to the IRS, which is a black hole when it comes to mail. And I'll ask them, well, do you have proof? No. What do you think the IRS is going to argue? You didn't send it. Maybe 100 years from now, they'll find it in a corner of some section of the IRS service center where you provided it to. But that's no good to you then, now. So anyways, get confirmation. Finally, Once that's done, a couple things are going to happen. Typically, the IRS will say, hey, we need more time to review. All right, whatever. Could take 6 months, who knows, but as long as it's in their court. They could also ask for more information. Just like I said with just the sort of the first response, send them a copy of that form, response from the CP2000 notice, have a cover letter, letting them know what you're providing to them in response to their request. Finally, the IRS can just disagree and say, hey, we disagree, here's our proposed changes, which is going to give you rights to an appeal or to have your case heard in tax court. Do not ignore this. Oftentimes with U.S. tax court, you've got 90 days to do something. And if you don't, you lose the right to have your case heard about the assessment without paying the tax first and then requesting a refund. It's convoluted how it works. For most people, you would think it would work this way, but generally speaking, you're required to pay the tax first, file a refund claim, have it denied, then you go to federal district court to then dispute it. Congress, knowing that this is a very big imposition on people, especially those in low income, provided an administrative appeal to tax court. But you've only got 90 days to do it. But you don't have to pay the tax in full. You just file your appeal, have your case heard, see if the court disagrees with the IRS and agrees with you. Sometimes you can also get what they call an IRS administrative appeal, where instead of a judge, you'll have a hearing with an experienced IRS agent who is technically independent. But all these things have timelines, deadlines, etc. And if you fail to do it, now you've got this assessment and you have to go through the whole rigmarole, another technical term, to basically pay it, request a refund, and then deal with it in district court, which can be super expensive. There are some ways to deal with it outside of that. They call audit reconsideration, or to do offer and compromise doubt as to liability. All of that can be expensive. You want to try to get ahead of it and have it taken care of before the assessment. Now, some of you may be saying, well, look, great, you told me what to do if I disagree. But what if I agree and I'm going to owe money, and I can't pay it? Well, we'll talk about that in the next episode is, okay, what do you do if you agree? There are a couple things you can do, and I've talked in previous blog posts about all the things you can do, but it's a good wrap up to this series on the CP2000 to go over, all right, what if I agree? What should I do? And give you some hints as to how to resolve it. So with that, if you have any questions, maybe you have a CP2000 notice you don't understand, you can certainly feel free to contact us, and we'll see if we can help you out. And with that, have a wonderful day. This is now just the beginning of 2023, and I hope it's a great year so far for all of you.